Yo, what's the word, G's? So today let me show you real quick the progress I have with the B3 version and the investing model. Remember, this is the version you buy and you have the EA 100% automatic working for you based in your risk and the investment available. So also remember, this is a suited model for specific ranges. So as you can see, the first model is tested under only buy conditions. The range is 2004 to 2024. I'm using only December. I'm waiting for the first of the next year, so I can have the whole ticks, no issues, at least get the 90% that I want. And here, as you can see, I have the same range, same EA, is the same set file, just with one minor modification. So let me break down the first part, that is the trailings. So the combination of my first order or my trigger, it's always I open a buy and a sell, so the EA knows where the trend is going. I don't let anything to probabilities, indicators, guess, or whatever that can fail at one point. So the simplest, easiest, and most effective way to know the trend is by being against the trend. So I decide to go against the trend all the time, and that way I'm able to tell the EA, hey, if you are opening sells, then buy is the trend, or vice versa. If you are opening buys, then sell is the strong trend. So I manage this by levels, but the first level is the trigger. So EA, once drop in the chart, will open both buy and sell at the same price. So the idea is I have the starting lot and the last lot. So in this model that it's not finished yet, I'm using, as you can see, the same. It's 9 for the pip value. This means this is pretty much my TP, but it's not a fixed TP. It's a dynamic because I have a trail step. So this is showing the best combination of results using this grid also for the first order. What this means, we go to the report, we can see I have a very big win rate of almost 95%. That's very dramatic or kind of artificial, I would say. It's a very big volume of trades, 59k. Why I do this? Because first of all, that first order is cleaning the range. So meaning once the trend or heavy trends start, I will be positioned in the best part of the trend because I'm quickly closing the order that will trigger the next ones. And also it's using 0.01 lots, so it's very hard every 100k or even with 5k to blow any account. And if you think that's wrong, well, show me your facts because I have mine. So this is how we do it. Then the high volume of trades is because of two reasons. I don't care about the win rate. I always keep above 80%, even though I'm a content trend trader, but this is very high. This what creates is an environment where compounding every profit that you close. As you can see, we start with 100k and we end up with almost 285. So that's a very big return with no compounding. So imagine you are compounding. So what I'm testing right now, as you can see, I have a small progression using a 1.6 multiplier with an initial lot of 0.01 and my last lot is 0.02. So let me show you a progression. Here you can see we start with the 0.01, and then since it's fixed or locked to only 0.02, every other level will open only 0.02. And let me go to the zone that I had selected. So I want to show you something. Why I always say using smart progressions is smarter than just using fixed lot or huge lots in the initial state. Here, the same range, the same time. As you can see, using fixed lot at 0.02, it's not the best option. It's better to use first the first lot with the minimum you can, and then you trigger a progression. I'm closing a little bit more money than I will be with, let's see, this changing a little bit the outcome. That's why I don't have the same order, but as you can see, this pretty much ends positive. So what I'm trying to figure out here is if it's worth increasing the initial lot once compounding or if it's better to keep triggering progression. So the next test would be I will use 0.02 with a last lot of 0.04 and 0.01 with a last lot of 0.04. So see if it's better to keep adjusting the multiplier and the progression to bigger lots, or keep it fixed to a small range where the initial lot is pushing for more profits, because you need to remember this high volume, it's not only for compounding. Once you double the initial lot, the profits that this scalping, like all these 0.14, 0.16 will be double, but also your rebates, because the second important thing are rebates. And with this high volume, well, brokers will love you because you're opening and closing tons of trades. And as you can see, it's a very smart way of doing it, because 95, almost 95% win rate with this big sample in such a large period. Like test any EA during this period with 90% or 89.98% data and show me the results, please. Let's compare them. Remember, this is only buy, not compounding. I'm still having not issues, but I'm working with the sell model. This is only up to 2012, so I'm having a kind of a mixed results. So also note, neither of those two set files, as you can see, here's buy and here is sell. Neither of these two set files are using smart progressions, only the first order, and here neither of the logics that I'm using is using fixed lot. I'm just assigning a different lot for every logic, so I'm able, like, I need to check, for example, my stopper logic, what is doing. So I have 0.04 initial and last lot, so I go here and I check, okay, in this logic, in this cycle, 0.04 is not opening, so what's going on? Why is closing after the cycle already closed? So it just helps me do more efficient my optimization and backtesting job. And here also I'm not using smart progressions besides the first order. So once I apply smart progressions, the idea will be at least, for example, here 0.07, 0.07. The initial I will reduce it to 0.01 or 0.02, all based in what data is telling me what that means. So here I have a 185k profit versus pretty much 38% drawdown. It's showing less because my absolute is around 16, meaning profits are adding to the risk, but the reality is the max drawdown is less than 40%. So by this, I can safely assume that I'm winning or closing more than I'm losing. My profit factor also shows the more or less the reasoning is above 3, so very efficient. And once I add the smart progressions, let me show you an example. Let's go to the trade that loses more. For example, this 0.2, it starts with 0.2, but if I start with 0.01, this will be half the risk. Also, this will be half the risk if I'm using a smaller multiplier than 1.6. So this will be also 0.01, 0.01 the third, and until the fourth one will be starting a heavier progression. So meaning my last lot, the one that is making the more profit, won't be a 0.02. You will be cleaning with a 0.04 or 0.05. So this makes more efficient and less risk my type of strategies. This can apply to a lot of systems that use grid. Manual traders can also apply it. Don't just, like, for example, here the 0.02, the first lot is open at 18. Yeah, at 8, no, that's the number. It's at 1693. And the last one, I'm opening it at 1338. So it's a very big range. And as you can see, account it's never at risk. It's very efficient how it's handling every major trend. So the idea is to reduce your average price instead of having to wait again for 1693 to happen, you know? I'm able to reduce my average price, have less risk in the initial phase, and even if price retraces at the third or fourth order, I'm making money because the progression it's meant for that. I'm not locking my risk at one price. That will be very inefficient for me because market tends to move and also ranges a lot. So You can be stuck with one position that it's not doing anything, so my money is not working. Like this, I have my money working in every range. As you can see, days and days and days you're closing positions. So it's not that it is just opening trades as crazy. No, this is efficient trading. Once you enter a big trend, you will manage your money, you will put it to work, and that's when every trader can profit, not when you're scared of making money, you know? If there's a big trend, then you wait for the retracement, and that retracement has tons of opportunities to make money, either in the retracement, in the small ranges, or in the big change of the cycle. So pretty much this is the stage of buy and sell. So once I finish with the sell model, I will be showing how this is working with fixed lots. Fixed lots is, as mentioned, this 0.07, 0.07 for initial and last, 0.02, 0.02. You can see everyone has assigned a specific lot and one move from there. And then I will add the smart progressions, and I want to also show you the, let me show you where's my, here. So the idea will be to stress test the range of both in all these periods. I have 73 sectors. Sometimes I go for cycles of 7, 10, and 20 years, 3, 2, 10. But mainly what I care is about the cycles that start just when the trend hits. So that's the max stress scenario. I need to keep my max drawdown lower than my initial deposit, and from there I'm gonna lower the risk. So if my max risk is 30% and I want a 50% risk or 15k max risk, meaning my money will be utilized, we could say, up to 15k USD based in data, I will then reduce using the, for example, this period 2004 2011 is showing the worst drawdown, and you can compare it with 2004 2024. It's almost the same. So I need to find in this that it's 2011 or can be 2008. So that's why I do this multi-stress test, also to avoid any overfitting or something that might surprise me once trading live. I don't do this to expect the same results. I actually expect better results based in my live trading experience, but not to flex. It's just to show how it should be properly done. This will be using, I will be doing the same for fixed lot, using the same lot, no multipliers. Then I will move to multipliers. For that, I use every logic. I use a period where I can balance and decide, okay, it's worth assigning more multiplier to this, or having a fixed lot here, or starting with a high lot and a slow multiplier here, because that will provide me the best balance for my margin and my account. So once the trend starts and I have a retracement, I'm sure that I'm having the best options to reduce risk and have a better average price, you know. Then at the end I will start with the let me remind, where is this? Here, the compounding. I don't have yet anything. What I need to do with compounding is to, every cycle that closes X, for example 5, 10%, we could say 1 to 5% is aggressive compounding, 5 to 20% is tight or not that aggressive, with something more conservative every 50% or every 100%. So I'm gonna test in different risk of compounding, we would say, because also leaving profits equity protection is it's a very viable and simple risk management precaution. So it's depending on the user. I'm gonna show how compounding works. This is with no compounding, so as you can see, your real risk, it's reduced. But if I start later, if I start this test in 2011, my absolute drawdown will be the same as the max drawdown, you know. That's why it's very important to stress test in the exact same year. So pretty much this is the value you get with DAAVILE. Also, don't forget that we have the free Discord group where I'll be sharing all my sauce and whatever I can. And also, if anyone has something to share, to ask, or anything, just let us know there. And in the comments also, if you want to be added, will be the link in the description so you can join. Have a great day.